Hey everybody, welcome back to the Wealth Journey channel. Quick question for you. If you could only buy one company for the rest of your life, what would it be and why? I'm interested to know what yours would be, so put it down in the comments below. Okay, so I'm going to admit something real quick to you. I'm going to cheat here slightly. I have 3 or 4 companies in this video that I'm going to tell you about because of different reasons, and it's because of where you might be on your investing journey, what stage you might be at, in my eyes. So, in the first stage, if you're just starting out investing and you need to build that pot up, I therefore feel you need to be in growth stocks or dividend growth stocks. In this case, I'd tend to side with, and you're going to smirk alongside me here, and you know where I'm going with this one, I'd pick Tesla. And that's just my personal opinion, it's not financial advice at all. Other examples that you might know of that fall into this area would be Google, Square, PayPal. These don't pay a dividend and are growing at a higher rate than the general market is. We're always going to use Google and YouTube to search for things and find things out. It is our go-to thing to do when we don't know something, simply put. It's quicker and easier to Google it, as the term is, than it is to ask our parents or ring somebody who we think should know what we need to find out. Google has nearly 92% market share of the search arena. Next up that I mentioned was Square and PayPal. These are at the forefront of the payment space and constantly innovating and offering more products and services to consumers and businesses alike. The next area is when you've kind of built up a reasonable sized pot and you need to transition from that growth to more stable, lower growth, potentially dividend growth companies, then for me, Microsoft are the company to be putting money into, like I have. Others in this arena are Apple, Visa, MasterCard. If you look at these 4 companies and look at their dividend growth rate, Visa and MasterCard are way over double-digit growth rates each year. For example, last year, just going with simple numbers, if they'd have paid $1 per share in dividend, they're now paying around $1.15 or £1.15 in English terms. And they've done that for the past 5 years on average. They've grown that dividend by 10 to 15%, which really, over the long term, is hugely valuable. Now, the reason they're paying dividends is because they can't deploy the cash flow and profits back into opportunities as fast as they're earning it. Therefore, they are repaying back loyal shareholders who've put money into them to fuel the growth over the past 20 to 30 years, it might be, with those companies that I've mentioned above. And finally, if you're at a point where you're transitioning to having a fully funded pot in terms of value, then you want to probably start looking towards dividend aristocrats. These are companies which have raised and grown their dividends each year consecutively for 25 years or more. These are very much stable and safe. They generally pay around 2.5 to 4.5% dividend yield each year. So that means if you had £100,000 invested in them, you would get anywhere from £2,500 to £4,500 back each year as a dividend. They also try and grow the dividend around 5% a year. Now, I'm talking very generally, and this isn't, every company does this or whatever. It's very specific to the management and how they want to manage their business. My main example in this area would be Johnson & Johnson. Others would be AbbVie, AT&T, PepsiCo, Coca-Cola, 3M, Procter & Gamble, just to name a few, all of which are really good dividend companies in my eyes that I don't have in my portfolio as of yet, but may look at in the future. One of the key benefits of a dividend aristocrats is that they have generally got a beta of under 1. That means that they are generally less volatile than the general market, so you don't see all the big ups and down swings. You see nice increase in value in their stock price. This also generally means, if they're a dividend aristocrat, that they are often leaders in their industry with durable competitive advantages one of the things that Warren Buffett looks for in his companies, and they have operations that generate strong, reliable cash flows which pay the dividend that they pay out. So there you have it, my one company per different investment stage for life, if you want to call it that. Bit of a mouthful. Tesla for growth, Microsoft when you transition to growth and growing your income, and Johnson & Johnson if you're going for pure income. I hope this has been an interesting video. If it has, check out my other content on my channel. But until next time, stay safe.